Making Money host Charles Payne is going to get the big decision at 2 p.m., but he joins us right now. Charles, it's always great to see you, and I want to get your take on this because it sort of feels like we're at an inflection point here. Either Jerome Powell is going to hike the 25 basis points as the market anticipated and then signal in his commentary some sort of pause, or he's just going to take the plunge and pause right now. But either way, this will be crucial for the market.
Yeah, you know, we've gotten to the point where it feels like we say this is the most consequential one in a long time, right? And today, to your point, this is extraordinarily consequential. The fact that we didn't wake up and the market was really plunging, I thought, was maybe there's enough folks out there who believe either A, there's a clear signal we get a hike and a clear signal that this is a pause. You know, maybe he even uses the word pause. Or maybe there's no rate hike at all. Of course, the dangers there is that what does the Fed see that if there's no rate hike? Now, remember, they do see certain things that they're looking at. For instance, this next senior bank lending loan officer survey. Yeah. They're accumulating that data right now. So if they know that tightening is severe already, why would they hike rates knowing that? And we'll know, again, early next week.
Yeah. It was interesting. We got ADP numbers this morning showing significant strengthening. You got JOLTS numbers yesterday showing that maybe some of the job openings are coming down. But this is a labor market that you could argue that for now is still continuing to tick along. Could the Fed not say the regional banking crisis is sustained? Maybe it's not a systematic issue. Maybe there were some inherent risks given the large uninsured depositors at the three banks that have failed. The labor market's okay. Inflation is nowhere near 2%. This is our go-ahead to keep going.
Well, he's already admitted a couple of things, right, in the last couple of meetings. So he finally admitted to the lag effect, and they see that coming. And also, they know that there are signs of recession. I mean, look on our screen. We've had crude oil all day.
Yes.
It was down 5% yesterday. It's under 70 today. Are you kidding me? Remember a month ago, the narrative was, okay, OPEC is tightening and China's coming back online. We were supposed to be at $90 a barrel.
OPEC did not intend this, by the way. I'm sorry. They're like, what happened?
Yeah, they're scratching their heads. You know, they're like, I thought China was reopening. Yeah, maybe we shouldn't take the yuan after all. But I don't want to digress too much. You know what I think is really interesting here, though, is with the situation with the banks. The Fed also finds themselves in a tough predicament because these rapid rate hikes help to create this issue. Right. And after they hike today, if they hike, that means money market funds are going to be even more competitive. That means even more strains on regional banks. And, you know, it's hard to ignore that.
Yeah.
You tweeted, I think today, is Powell going to twist the knife a little bit more? And I think a lot of people at home are saying, how much more painful will it get if they hike again today? Is there a lot more pain in store for folks at home who are watching these interest rates and still high inflation and saying, I can't get out of this? Either I'm paying a lot for money or I'm paying a lot for groceries.
Right. You're right. And it's, I think the problem, though, is Main Street's pain and how does the Fed see it? If you only see it through these data reports and spreadsheets, then you don't see it. You know, you don't see it until it's really way too late. And, you know, you mentioned the JOLTS report, for instance, right? That's a 2-month-old report. By the way, the 3-month decline is the second largest in history. So these jobs are coming down quickly. But think about this. That's 2 months ago. It might be more precipitous than even that. So the Fed's got to weigh all of this stuff. And I know Jay Powell's thinking about his legacy. I know he's concerned about his legacy. But this would be a perfect opportunity to also say, hey, I'm sort of pragmatic. We've done an amazing job in terms of, you know, stepping up to the plate. We did it. 75, 75, 75. We didn't listen to anyone. We went straight ahead. Volcker 2.0. Now let's wait for a moment. Let's just see just how much damage we've done.
I don't know. All I remember is transitory.
That's all he remembers, too.
Hang tight for just a minute, Charles. We want to get your take on this next story as well, because there's some AI anxiety out there. Vice President Kamala Harris is meeting with 4 major tech executives tomorrow on artificial intelligence as the technology is putting millions of jobs in jeopardy in this country. Fox Business's Kelly O'Grady is live in Los Angeles with the latest for us. Hi, Kelly.
Hi, Jackie. And that's right. There's a lot of trepidation about what could happen to the job market. Now, we are seeing predictions that AI will impact white-collar jobs versus blue-collar. There's a new study from the World Economic Forum. It predicts that 14 million jobs could be lost by 2027. Close to a quarter of all jobs will change, and those drastic adjustments would largely be driven by AI. So some of the roles that would be at risk would include accountants, cashiers, customer service workers, jobs that could be easily replaced by automation. Many CEOs hope, though, AI will create jobs as well.
AI can take over such of a lot of these activities. So it's about cost avoidance. As long as you have a growing business and you are transforming your business, you need different skills. So this also allows you to reskill your workforce.
The big question, though, around that reskilling idea is, what about the folks that were pushed out? Will they be left behind? I mean, these folks are not just a statistic. They're your neighborhood bank teller, your neighborhood cashier. Jackie, Brian Taylor, I'll leave you with this. We're actually already seeing something like this play out. There's a writer strike happening right here in Hollywood, and the writers don't want studios to use AI in editing, writing scripts. You're seeing that trepidation already playing out in real life. I'll send it back to you.
A great point. Kelly O'Grady, thank you so much for that. And Charles, I want to get your take on this because we have the news from IBM as well. These are jobs that will go away. People are banking on the fact that AI will create more jobs, but we don't necessarily know that. So we're not going to see these jobs come back once they're gone.
Right. And, you know, I always say I'm a natural born Luddite. And so I'm always afraid of this kind of stuff. And one thing, even if everyone's correct about the jobs that they create, the ones that will be lost immediately. And that transition period is going to be a tough gulf. And again, you know, not everyone's going to be able to be, quote unquote, retrained. We already see that now. You know, when you try to train, we tried to train people, generational issues come up, and other problems have come up. So it's devastating. And I don't think people should be comforted in the C-suites by thinking it's just going to be low-paying jobs either, right? This thing can take over anyone's job. It can do our job, right? I mean, without the real cute inflection points, but it can read the teleprompter. So you got to be. I mean, there's no guardrails on it. I can't say I have a lot of confidence about what the Vice President is going to get done.
Well, can we talk about some of the guardrails? I think Lena Khan, the chair of the FTC,
Let me guess, she's going to want to regulate it. Let me guess.
Spot on.
Okay.
Let me bring you a quote, though. She runs the FTC. She says it's within her judicial power to start some regulations around AI, Charles. She says when enforcing the law's prohibition on deceptive practices, we look not just at the fly-by-night scammers deploying these tools, i.e. AI, but also some of the upstream firms that are enabling them. Sort of hinting that she's maybe going to be going after some of the big tech. And I mean, what does that regulation look like?
That's a great question. I mean, listen, if it's something about selling a product, that was falsely manufactured through AI and or labeling, there's criminal activity, and then there's just, hey, we've replaced the human being with artificial intelligence.
Let me say this. I don't think socialism and AI mix well. Okay, if our solution to AI is to grow the government in order to solve that problem, I don't think it works. The interview we watched, he said businesses need to grow to solve this problem. You got to create more opportunities. Socialism doesn't do that. So when I hear Lena Khan say regulate, I think, oh, so you're going to marry AI and big government?
I just did it to work you up.
I know you did.
And it worked.
It worked.
And it worked. I like to see AI try that, right? It's not that nuanced just yet.
Good point.
Yeah.
All right. Well, a new doom for the doom loop. A slew of businesses are closing up shop in San Francisco, and they're blaming rampant crime as the reason. So Nordstrom, Anthropologie, Saks Off Fifth are the latest retailers to flee the city. And I want to make sure that I get to this soundbite because it's a really good take, powerful take on it. Laura Ingraham was there. Watch this.
This is ground zero here in the Tenderloin district for hardcore drug addicts in the area, correct?
Right. I mean, you just take a look around and you see people addicted to fentanyl, crystal meth, heroin. You got your crack cocaine still, but you got your garden variety of all the type of drugs. And this is where you're going to find people who are on all of these different drugs just walking around. You're going to go down the street and you're going to see someone who's shooting up. Right in broad daylight.
I see this, and I worry that in a matter of time, New York City is going to turn into San Francisco.
It's hard not to imagine that happening. Listen, I lived in New York in the 70s, and, I hear people talk a lot, folks who just moved here in the last 10 or even 20 years, and I say, you just have no idea how bad it can get. I've seen everything. I've seen murders. I've seen people shooting up. I've seen every type of antisocial act known to mankind in daylight, in the public, walking to school, climbing over junkies, climbing over winos. I've seen it all. And I'm telling you, we're barreling toward that quickly.
Can I play devil's advocate?
Sure.
You're the king of charts, so I'm trying to bring you a good chart to get you worked up. Pull this up. It is from the MTA and BART, which is the Bay Area Regional Transportation Authority out in San Francisco. New York City is now back up to about 70% of 2019 levels. San Francisco is only at 47% of 2019 levels. So could the case be, though, New York, at least what it has going for it that San Francisco doesn't, is people maybe are returning and there is a sense of safety in numbers the way San Francisco right now doesn't have?
No, there's no doubt New York feels safer than San Francisco. I mean, listen, you could also have done the office vacancies, which are 30% in San Francisco.
Yes.
You could have done the cell phone usage, which is down 70%. I think in New York is only down like 25%. So there's a lot of charts, parallels that show we're doing better than it, but that's not a real comforting idea when you have folks in charge who would like to get to this point. You know, I mean, it's a cautionary tale. And if we just thought there was enough for it to be a cautionary tale, we wouldn't have this conversation. But we do know that whatever the ideology is that drives this, charts, statistics, even watching big business flee a city, often not enough to deter people from they're wedded to these ideologies that in their mind they think that somehow the outcome is better, even though it's obvious that it's not.
So my chart didn't impress you.
It was impressive. Look, I give it a C+.
At all. He didn't get
I give it a C+.
Whoa, harsh
Thanks, Charles.
grader.
Yeah.
Charles Payne, great to see you.